Okay, to start with, I think we've seen some corrections in the last couple of weeks. We've come from a very bearish position, and then you've had a number of stocks, from the banking stocks across other stocks, doing rather weak, but we've seen some slight corrections in the last couple of days. And then it goes to show, to a large extent, we've had the impact of some of the FPI sales that we've seen, and then they've tried to take out some of their cash, and that's why we've seen some increased pressure in the FX space. But in very real terms, I think there's beginning to be one or two strong demand coming around that, and then taking that back to the T-bills market. If you look at the PMA yesterday, it will be interesting to see how the upper end of the curve has been very strong. As a matter of fact, the subscription levels were way above 200%. And so you have the CBN coming up with about 106 billion in terms of offer, and then you have subscription around 396 or thereabouts. So that goes to tell you that even though we've had some outflows from the FPIs, but there's still some very strong demand around that space. Now that demand will be largely driven from banks and banks and PFAs willing to take a medium to short-term view around the market. And don't forget, as we go further into Q4, when you have the election steam take a lot more momentum and take the driver's seat, you have a large number of people still willing to hold on to the short end and hope that as we get out of the elections and have some level of transition, we'll be able to hold the levels and you see more correction. And then as numbers come out from banking to manufacturing and all other corporates into the end of the year and early Q1, we expect to see some strong numbers. Don't forget that sometime this month, we'll expect the Q3 results to start to kick in, and then that would drive some level of confidence depending on how the numbers trickle up. But there are indications that you could find strong numbers or fairly improved numbers from where we're in Q2, and that should drive some demand sentiments within the equity space.
Uche, to what extent do you really think that the figures that we'll see from the results coming out in the next in Q3 will actually prevent further capital flight and hold investors down?
Okay, in terms of capital flight, we must understand that it's not just the numbers around what will happen in Q3 that's the major driver. To my mind, I think you have a lot more around political. It's almost typical when we get into an election year in any part of the world, including Nigeria, that you have people, investors get cautious, right? But beyond that, I would strongly believe that when the numbers come out, and don't forget, between Q2 and Q3, we've had fixed income rates edge up by almost 100 basis points or a lot more. And then you've had liquidity levels increase within that same space. So you have a lot of people showing up their portfolio, getting on higher returns on their fixed income portfolio. You've had some credit numbers increasing to the real sector within the space. So we expect some decent numbers in Q3 compared to Q2, and that could bolster demand sentiments in the market.
Let's look at some of the sectors in the Nigerian equity space. I know that the industrial goods sector has been taking a pounding over the last few tradings, actually moving in seesaw direction. The September PMI that came out yesterday leaves us at 56.2 index points. What is this indicative of directly as regards impact on the manufacturing sector?
Now, you must understand that we're also playing, towards Q3, you have a number of inputs that come into the number of equipment and all of that people need to position themselves ahead of the U-tide. So typically, for the guys in the manufacturing sector, demand levels we expect to ramp up in Q4. So yes, the numbers might look, to my mind, will be more indicative of weakening around the numbers from Q2 to Q3, but we expect some improvement in Q4. So by and large, you have more flows, some demand levels get elevated around this time, and it's almost normal between Q3 and Q4.
Uche, there are expectations by economists who say that slower PMI growth, as we saw from yesterday, down 0.9 index points, is a signal of poor growth, results of Q3 GDP. What impact, or how do you think this will impact the markets?
Well, in fairness, if you recall what the governor had said at the last MPC, that there are concerns around growth, and that's why we have to deal with the dual impact of rate elevation and rate moderation. But I think to a large extent, we will get in Q4 some level of moderation. No doubt there are concerns around the numbers, but I think we'll see some level of improvement in quarter four.